Excuse me. Hey traders, Todd here, tradinganalysis.com and insideedgecapital.com. I want to do Elliott Wave analysis of the Nasdaq, and those of you who've been following me for a while know, I've been doing Elliott Wave ever since 2006, 7, and 8, when I was working on Wall Street on the hedge fund, writing the daily research piece during the global financial crisis. I've been doing Elliott Wave for a long time, and it's often misunderstood. It's given a very bearish, heavily doom and gloom reputation by some prominent, colleagues and people I really like and respect. I have my own way of doing it. It's not for everybody. Most traders want to have a very formulaic A plus B equals C, and the ambiguity of it and the subjectivity and the requirement to not trade with IQ but EQ is a lot for some people, and that's fine. So this is my approach to understanding where we are in the indexes, to help us figure out where how far advanced a trend or correction may be, and then we'll adjust our positions and portfolios accordingly. And then, to round out the structure, what you want to do is then find the best sectors, the 11 sectors that make up the American economy, find the best rotation, find the best industry and stocks that have the best technical and fundamental characteristics. But that all has to align with where the indexes are going based on your account. Now, I'm going to take you through the Nasdaq. There's two scenarios, and I always have 2 or 3 battle plans. You never go into battle with just one. A general doesn't go in with just plan A. He always says plan A, and if A doesn't work, then we're going to go to B, and there's a few different possibilities down the line. So this is going to be a heavily Elliott Wave based video, and if you're not into that kind of thing, definitely don't keep watching. Okay, so I'm going to be looking over here off screen, and I'm just gonna walk through the 2 time frames to start. So this is the Nasdaq 100, and over here on the left is monthly. Here on the right is weekly. Okay, so this is the 2000 tech crash, and then the first move up here from 2000. That was 2002 to 2007. That's going to be the housing rally, and then this little guy is the GFC. Obviously more pronounced than the Dow and the S&P. So I believe this is 5 up, and there is some debate to be had whether this is a B wave or if this is a new motive impulsive move up. So I am going to label it as a motive impulsive 1. And as I mentioned, if it's not 1, in fact, if it's a B wave, then it'd have to be this 2 goes here. So it'd be A, B, and C. I think it counts better as a 5. So that would be wave 1, GFC is 2. Now wave 2 gives rise to a massive rally in wave 3, and that was all the way up to the 261% projection of 1 versus 3, right? So the rally in the Nasdaq was all in peak, trough to peak, 1,545%. Okay, now the most significant correction that we've seen post GFC was this guy right here in 2022 when we had the inflation and interest rate spike. So I think that's enough to be wave 4 against this guy right here. Okay, so let me just push this out a little bit, and let's get simple here, simpler. Okay. So I'm going to push some of the fib around and just show you what that, how it attaches. So the 2618 is there. So I'm going to take that off. That's 3V1. Okay. Now, there's 4V2. So 61% of the distance traveled in the global financial crisis was the 2022 inflationary spike. Okay. So the first thing, I think one of the more important fib ratios, and what we're going to do is I'm going to talk you through each one and then build a zone. So if you look at distance traveled in wave 1, which is 2002 to 2007, equality from the 2022 lows is going to be at 2939. Okay, so what that means is this whole wave 1 rally was 181%. So another 181% would put you right here into that 5v1, which is now hidden behind the screen, right? That's a very typical relationship if the count is right, okay? So 61% of that, of 181%, is going to be at current levels of Nasdaq 19,795. So we're right there, okay? So, you know, again, if 3 was extended, which it clearly is, 1 is expected to be the baseline for wave 5, and that's going to be right there. So that's really important. So we're at the beginning of the 61% 5v1. Okay, from there, let's look at 5v4. So now what we're doing is we're doing an external retracement of wave 4 up in 5. And a relationship that I teach a lot in the Fib course is a move that does not fail at the 786 retracement probably goes to the 1272. And that's what's happened, okay? Now, we've exceeded the 1272. The 1618 of 4 up in 5 here is at 22,000.4 in the Nasdaq, okay? So that's the next little bit of zone. So from here, you know, this is gonna be distance traveled in 1 through 3, projected up from 4. A typical relationship is the 38%, and 23% is here. That's very shallow, okay? So, you know, from here, these are kind of secondary levels, and then the other one I want to bring your attention to is 5v3. So percent distance traveled in 3, which we know is like 1,500% in wave 3, 1,545. So if you take 38% of that, you know, whatever, roughly 1/3 of 1,500% is 500%, that's going to be at Nasdaq 30,000. Okay, so on the monthly, what we're doing is we're starting to build out 2 clusterings of Fib resistance zones. Okay, and the first one is we're right in the middle of it. Okay, we're right in the middle of it, ranging from 19,000 to 22K. If we break through that, there's a decent shot that we're going to rally up to the next zone. Okay, so from current levels, it's about another 40% until we begin to enter the zone, and then the middle of the zone is roughly going to be a 50% rally. That's going to be obviously looking out, I'd say, over the next 12 to probably 24 months. Okay, so we know where the wave 5 move is. Okay, now longer discussion. And I've had this with our members, but what happens after the wave 5 move? Well, it's going to, this is a long discussion, but it will complete a wave 3 and then bring in a wave 4. The Nasdaq 100 started back in 1985 or so, where the Nasdaq comp was like back in the early 70s. So just because an index was created in the 70s or 80s, and you can't just count 5 waves up and say all the stocks that are in it are going to be in for a significant crash. It doesn't work that way. The economy and you know, the companies that help launch, you know, Apple and Microsoft and IBM, these companies were in existence prior to the origin of the Nasdaq. So you just can't start the Nasdaq at an arbitrary date because the Nasdaq decided to be formed. That doesn't work that way. So I'm superimposing the wave counts coming from indexes that predated the Nasdaq. Okay. Okay. Let's go with this right here. All right. So the point there is we're not gonna, you know, you don't need a crash after a 5-wave move is completed. We're going to be superimposing from something higher that predated the Nasdaq. So that's fine. So here's the monthly. Okay, so now what you have to do to fine tune one of these 2 zones is you have to get inside of this 5, which this degree is cycle 5, and you've got to get inside and find 5 primary waves to refine when this guy is going to complete or possibly going to complete. So you can go in and zoom in on the monthly, or you can start moving time frames and get down to the weekly. Okay, so here's the weekly over here. Now, here's where things I think get where we have to start bringing the primary and the alternate counts. Now, keep in mind, as I move off the monthly and go over weekly, these two highlighted zones are from the monthly. And this is the beautiful thing about Motive Wave is any change you make on this time frame is going to be reflected on all linked time frames. Okay, so all the work we do over here is going to carry over as we move to smaller time frames. The issue now with these two significant monthly resistance zones is, what is this move from late 2022 to today? And I do have two interpretations on this, and I can't know which one is going to be a reality. Because if I could make all of you guys multi-millionaires. And if you have enough capital, maybe billionaires. If I could tell you with certainty where the market's gonna go. Elliott is just, it's situational awareness. It's having plan A, plan B, plan C. And you have to act on a plan, but as soon as you have enough information, your plan is wrong, you got to control risk, cut your lure, and move on, and go to plan B. So over here on the weekly, it's possible that we have a 5-wave move up, and the first resistance zone that I just talked about is going to be the top. And the internals of that on the weekly, I think, may be like this. Okay, so we have a diagonal up in minor 1. Okay, this red degree is the minute degree, and then 5 waves make up minor 1, and then we have a complex down in minor 2, and then we have kind of a wonky wave 3, minor 3, pull back in 4, and then another move up in 5. Okay, now when I click on this, all of the fib ratios with a yellow bubble correspond to this. So on top of the monthly zone that we created right here, we have 5 smaller waves with fib projections that help us reinforce this zone that again is 19 to 22. So that's possible, and I'll even go down. Oh, there's Julius. I'll even go down to a daily and show you the smaller degree within that. So within the green 5-wave move, 1, 2, 3, 4, 5. You can even. Sorry. I think I can turn off all notifications. There we go. You can count within each green wave, each of the 5-wave move, right? 1, 3, and 5. You can count 5 smaller waves. So we're on this interpretation. We're coming up into borrowed time, and it's possible it's this. The market is so good in here. Semis are so strong. We know what's going on with interest rates. We know inflation is coming off. We know it's like 80-20. We're going to get a cut in November. It's like 60-40 if we get something in September. We know where rates are. We know earnings are good. It's so good, and I think it's becoming concerning. And yeah, the breadth is certainly a concern. We're being led by mega cap growth, and there's no doubt about that. So I could see this reality starting to come in. However, if I flip over to the red cow, you know what, guys? The concern, and I think everybody knows what I just said. We have visibility. We know what's going on. The red cow perhaps would say that this first zone of monthly resistance that I just mentioned on the blue cow, let me just do this commentary. Let me go like this. So there's this first zone that I mentioned up to 22K. Maybe this is not the right path. Let me just pause these notifications. 30 minutes. There we go. Maybe this is not the ultimate, this is going to be the failure point. Maybe we've got that 40-50% rally to come before we have something more significant on the pullback. Okay, so this is the monthly. Let me go over to the weekly. Instead of like the blue count being, let me go weekly. Instead of it being a pending 5-wave completed move up, like I have shown here, green 5-wave move with the setback. If we go over to the alternate, maybe it's not 5 up, but it's 1 2 1 2. And if it's 1 2 1 2, like that's once in a decade, once in a decade and a half breakout, third wave, like life-changing money kind of situation. It's possible. And I'm not here responsibly telling you it's gonna happen, but with the AI boom and the profits that these companies are printing and the implications for how various sectors and industries are going to evolve and be more efficient, we could be going into a life-changing bull market, and that would bring you 40-50% higher in the next year or two, and that would be a third of a third. Okay, so what does that mean? Well, the move up to 22.5 in the Nasdaq is going to be very telling. It's either going to produce a failure that brings us back down into this zone based on the blue count, or we do not hold 22.4, we continue higher, and the third of a third goes, and we start moving 25, 27, 29, 30K, and at that point, then we have a wave 4 that would give rise to a correction that I'm going to save for the members at Trading Analysis, but it would be something that would be quite significant. It wouldn't be a crash, but it would be a pretty good correction. Probably back to the breakout point. So the whole thing is the move up from late 22. Is it 1 2 1 2, and we're about to go third of a third like this and pierce through 22.4, or are we going to hold 22.4 and we're in for a sell-off? So I don't know. I wish I had a crystal ball to tell you exactly what the future holds, because we can make a lot of money if I knew with certainty, but I don't know of a methodology that tells you exactly what's going to happen and when. If you have one, let me know. But hopefully that was helpful, guys. All the best, and I'll see you in the next video update.